20 million, from 100 million to 200 million. These are the sort of questions we are looking at. We have a panel of speakers to help us frame issues and questions moving forward. First of all, we have Dr. Nasser Saidi, Chief Economist of Dubai International Financial Center, who will share his thoughts with us for a equity market for SMEs and growing companies. Next, we have Vanessa Abernethy, Acting Head of Listing Authority, Nasdaq Dubai, who will present on how SMEs can benefit from listing and how to prepare. And we have Tom Speechley, Senior Partner, Abraj Capital, who will be presenting a topic entitled Unlocking Value in Our SMEs, Responsibility and Opportunity in Equal Measure. Next, we have Rajesh Merchandani, Managing Director of Dun & Bradstreet, South Asia Middle East Limited, who will present on the relevance of credit ratings to SME development, a very critical component in terms of corporate governance and transparency in today's post-crisis world. And finally, we have Nick Nidal, Director of Hokama Institute for Corporate Governance, who will present a short primer on the corporate governance for SMEs. Again, a very timely and topical issue post-crisis. Thereafter, there will be a Q&A session where we can ask the experts for their views. As I said, no sacred cows, just ask tough, hard questions, and we see how much we can share and answer you. Without further delay, let's welcome Dr. Saidi. Dr. Saidi, please.
Assalamu alaikum and good morning, everybody. As you can see, this is already a specialized topic. So we're going to be talking about specialized SME markets for SMEs and for growth companies. That's the agenda. I'm going to start off with the fundamental reason why we need a particular type of equity market that's suitable for SMEs. I'll talk about the economic importance of SMEs. This was discussed already by the speakers this morning, but it's good to focus on that. I'll talk about some of the challenges that are being faced by SMEs, particularly insofar as financing is concerned. I'm not trying to, this is not going to be an encyclopedia about SMEs and all their problems. That's not my purpose. But I want to focus more on some of the critical aspects having to do with the financing of SMEs. And then I'll talk about setting up a national and regional market for SMEs and growth companies. To begin with, prior to the recent events that we are all living across the region, economic activity has been growing fairly fast in our region. So we've had recovery in the MENA region. And so if you look at the IMF forecasting 4.7%, this is prior to the recent events in 2011, so a bit higher than what we've seen in 2010. But nevertheless, our performance has been less than other emerging markets. Other emerging markets, if you look at Asia, forecast to grow 8.4% on average this year. Even sub-Saharan Africa, one of the poorest regions of the world, expected to grow at 5.8%. But one thing that's certainly true is that in our region, even though we've had good growth during the past decade, at least since 2002, that growth has not been inclusive, and we have not had trickle down to the wide mass of people. And that has meant that we're facing vulnerability. And we have chronically high unemployment in many of the countries of the region. I'll offer some statistics on that. And there are also wide income disparities. And indeed, if you look at the statistics, the distribution of income and wealth has deteriorated over this period. And therefore, as a result of all this, job creation has become a true priority for our young people. And it has to come from the private sector. And if we're going to be sustaining growth, we need to orient ourselves towards the private sector. And that's why focusing on family-owned enterprises, small and medium enterprises, is critical at this stage. And as we heard from our speakers this morning, at a high level, what you really need are structural reforms and development policies that are directed towards SMEs, and I'll mention those. This is an interesting chart that you should look at carefully. What this shows on the vertical axis is the fraction of population under the age of 25 in our region. And on the horizontal axis, the youth unemployment rate, that is the number of people who are below 25 who are unemployed. And as you can see, in countries like Yemen, Palestine, Iraq, Sudan, Djibouti, Jordan, and Algeria, the unemployment rate for young people is well in excess of 35% and can reach up to 45%, if not more. But even in some of the more developed countries in our region, there is a high unemployment rate of youth. So we have a socioeconomic problem that we need to address. And the way to address that is by creating jobs and by focusing on SMEs and family-owned enterprises. So that's the underlying basis for our interest. Second, of course, is that SMEs are very important in the economies of the region. If we look at Dubai, they count for 95% of the total enterprises in terms of numbers. They employ 42% of the workforce, according to the Dubai Statistics Center, and they contribute something like 40% of Dubai's GDP. So their contribution is very substantial. And the reason why they're so substantial in Dubai is because Dubai is the most diversified of the economies of the region. If all you produce is oil and gas, there are not going to be many opportunities for job creation and not too many opportunities for SMEs. But if you diversify your economy, then you create opportunities, which is the reason why Dubai has been so successful. Diversification has meant encouragement of SMEs. But at the same time, if SMEs are successful, they will help your diversification effort. So there's a win-win situation here. It's also true that more than 90% of all commercial activity in the GCC and in the region, and in our region, is family-owned businesses. And combined in terms of numbers, in terms of the capital, they are the predominant form of business. However, despite that fact, they are financially constrained. They don't always get access to bank lending. And if you look at some of the statistics, and this comes from a survey from the World Bank, only 20% of MENA region SMEs have a line of credit or a loan from a bank. So they are financially constrained, so they have to rely on their own resources. Only 10% of the investment expenditures are financed by a bank loan. The World Bank Union of Arab Banks survey, however, found that the MENA region banks consider the SME segment as being potentially profitable. However, the problem is that they're small in size. If you're looking at a loan proposal, you still have to spend as much time for a 100 million loan proposal as you will do for a 1 million loan proposal. So the banks will tend to go for the larger sized loans and will tend to be less interested in the smaller sized loans. Even though SMEs can be highly profitable, even though they are just as good and creditworthy as some of the larger companies. Lending volumes have not been impressive, and particularly now with the crisis that we've been living on a global basis, but which has repercussions across the region, it's also meant that banks have been less willing to lend to the SME sector. So it's been facing already a financial constraint, which was exacerbated by the financial crisis. When you ask the banks, and these are results of the survey, what are the issues that they face? Well, they'll tell you there's lack of transparency, there's not good financial reporting, there's a weak financial infrastructure in general, you don't have centralized credit reporting. We've just passed a law in the UAE back in December for centralized credit information. Let's hope that'll move quickly. You don't have always good protection of creditor rights. You don't have always the possibility of collateral lending and secure collateral lending. And